All right, let's talk about something truly wild. What if I told you there's a company, one that a lot of people have probably never even heard of, that's looking at a valuation so huge it could completely change the game for private markets? Well, that company is Tether, and the number we're talking about, it's almost hard to believe.
So we have to ask the question, right? Is this about to become the world's most valuable private company? I mean, could a company that lives and breathes in the crypto world really be on a path to becoming one of the biggest private players on the entire planet?
You're seeing that right. $500 billion. Half a trillion. That is a number that puts Tether in the same league as some of the biggest public companies out there. So, the obvious question is, how is that even possible? Is a number like that even for real?
Okay, to really get our heads around that massive number, we've got to start with the news that kicked this whole thing off. A potential new funding round that is sending some serious shockwaves through the financial world.
So here are the details we have. Tether is reportedly evaluating a raise of somewhere between $15 and $20 billion. But here's the absolute kicker. That giant pile of cash would only be for about a 3% stake in the company. You do the quick math on that, and it points directly to that mind-boggling $500 billion valuation. And with a heavy hitter like Cantor advising on this, it's not just some random rumor. People are taking this very, very seriously.
Look, a valuation like that can't just be built on hype. It has to be backed by some serious profits. So how in the world does Tether actually make its money? Well, the answer is surprisingly simple, and it happens to be perfectly built for the economy we're in right now.
First, let's just cover the basics really quick. Tether's main product is USDT. It's a stablecoin. The easiest way to think about it is just as a digital dollar. For every single USDT token out there, Tether says it holds $1's worth of assets in reserve. So you get the stability of a good old-fashioned dollar, but with the speed and the 24/7 always-on nature of crypto. It really is the essential plumbing for the entire digital asset world.
And the results of this business model? They are just staggering. Check this out. In 2023, Tether made $6.2 billion in profit. By 2024, that more than doubled to over $13 billion. And it's not slowing down. They pulled in a record-breaking $4.9 billion in profit in just the second quarter of 2025 alone. I mean, these aren't startup numbers. This is on the level of major global banks. So, where is all that profit coming from? It's not from, transaction fees or anything like that. The vast majority of it comes directly from the interest they earn on their massive reserves. When you're in a high interest rate world and you're sitting on over $127 billion in US government bonds, well, that turns into a pretty lucrative business. They just sit back and collect the yield.
Now, let's pull back the curtain a little and really look at the scale of this whole operation, because the numbers are just nuts, especially when you realize how incredibly lean this company is.
By late 2025, Tether was managing a balance sheet of around $174 billion. That's how much they have to hold to back every single one of their tokens out there. That is a massive amount of assets under management by anyone's standards. And right after seeing that massive number, here is the part that will make your jaw drop. To manage that $174 billion, the company is targeting a headcount of just 200 people. Think about that. This is not some sprawling bank with tens of thousands of employees. It's an unbelievably lean, high-margin financial machine. And if we take a peek inside those reserves, you see two assets that really dominate. The first is that massive pile of US Treasuries we just talked about, which, by the way, makes them one of the largest private holders of US debt in the entire world. And the second is a huge stash of over 100,000 Bitcoin, which gives them a major foothold in the core crypto asset itself.
So, all of this begs a really important question. Why is there so much demand for this product in the first place? If we're going to understand Tether's valuation, we really have to understand the massive global role that stablecoins have carved out for themselves.
So here's why this is such a big deal. Stablecoins like USDT are basically the lifeblood of the crypto market. They're the bridge asset that lets people keep trading when traditional banks are closed for the night or the weekend. But they're also a complete game changer for global payments, letting people in emerging markets send and save money in a dollar-like asset without dealing with slow, expensive, old-school systems. They're basically giving the world US dollar access, but on crypto speed rails.
And trust me, this is not some small niche market. In the first half of 2025 alone, stablecoins settled almost $9 trillion in transactions. That is a global financial system running at an incredible scale, and Tether is sitting right in the middle of it.
Of course,
Anytime you get this big and this influential, you're going to attract a ton of scrutiny and some pretty significant risks. So we can't really talk about Tether without also talking about the challenges and the controversies that follow it everywhere.
And that really brings us to the core tension here. On the one hand, you've got this undeniable market utility. It provides speed and access that old-school finance just can't compete with. But on the other hand, there are these very real concerns about systemic risk. Critics are constantly calling for full, independent audits, a really deep, skeptical look under the hood, instead of the simpler attestations that Tether currently provides. And all of this is playing out with the growing shadow of regulation looming over it.
So, what are the big things to keep an eye on? Well, that demand for more transparency, for real audits, that's not going away. The fact that the whole market relies so heavily on just a couple of big players like Tether, that's a classic concentration risk. And of course, regulators all over the world are paying a lot more attention. All of these concerns point to the ultimate nightmare scenario for any stablecoin, a de-peg event, where it actually loses its one-to-one value with the dollar.
Which leaves us with this one final thought. Tether has built a financial behemoth. It's a high-margin, globally critical business, and they did it at breathtaking speed. But as it looks towards a valuation that would put it up there with the true giants, the biggest question of all remains. Is its foundation of transparency and trust actually strong enough to support the massive, massive weight it now has to carry? That, right there, is the $500 billion question.